is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Stocks rally as investors downplay the prospect of higher Fed rates. We look ahead to jobless claims out later today for further signals. Standard Chartered announces a $1 billion buyback. Commerzbank lifts its full-year profit guidance, shares climb. And Nestle posts weaker than expected full-year net profit, while Pernod Ricard posts a wide beat and announces a large buyback plan. Well, good morning, everyone. Let's get straight to the markets. And the market's actually seeing quite a lot of positive news. Not only some of these earnings that are really beating estimates, especially some of the share buybacks, but overall traders embracing the risk-on mood after we had that U.S. data in the U.S. Initially, the market wasn't quite sure what to do with it, but now actually saying that, look, it maybe means that the economy will get through it, and we now talk about a no landing. Investors really taking that comfort, not only from earnings, but the resilience in the economy. We'll see if we have that later today as we get more data out of the U.S. So if we look at European markets overall, and of course we need to look at currencies, and for example, the Bloomberg U.S. dollar index, 1,240. But if we look at the breakdown, I do want to spend a bit of time on some of the corporate news that we're watching out for. So let's look at the breakdown, for example, between a CAC 40 and a DAX. Over in France, at the CAC 40, we see Pernod Ricard powering ahead, gaining some 4.5%. If you look at some of the other, not only interest rates led banks, but also some of the earnings overall. Commerzbank also doing especially well, and that's giving a nice little boost to the DAX. Commerzbank saying it expects profits this year to be significantly above their initial target, what they earned in 2022. And of course, these results cap the first half of a 4-year turnaround plan under the chief executive that benefited also from rates tailwind on the back of the ECB's efforts to contain inflation. Now, retail sales in the U.S. jumped in January by the most in nearly 2 years, signaling robust consumer demand. The surprise increase of 3% could really bolster the Fed's resolve to keep raising rates in the face of persistent inflation. We're now joined by Salmond Ahmed, Global Head of Macro and Strategic Asset Allocation at Fidelity International. Salmond, thank you so much for joining us. Is the market a little bit too optimistic? So I know we had that good figure from the U.S. They didn't quite know how to interpret it, first of all, but can we really see a no landing scenario?
Good morning, Francine. Definitely, I think it creates that dilemma for the market that if the demand side is still strong, what will happen to the future inflation prints and, of course, the implications for Fed policy. I think the market is getting ahead of itself. This tightening was not done on planet Mars. This tightening was done on planet Earth. So, and as inflation becomes stickier from now, because the first 3-4 percentage points were easy to get in because of headline inflation, commodities coming down. If you look at core services, ex-shelter, that's where the problem lies, and that may have implication on tighter Fed policy going forward.
And I tend to agree with you that actually you don't tighten monetary policy without an impact, but then you look at earnings and also forward guidance. If you look at Cisco, I mean, they should be seeing it in the data. If there was a downturn, why are we not seeing it in earnings?
So this cycle is unique in the sense because of COVID shock and, of course, the stimulus which was put in. And there was a lot of fiscal stimulus which came through the system and ample savings. Now this tightening comes through and the lead lag relationships have widened. But at the same time, we have to think about what will the balance sheets do when they start rolling over into these higher rates, which starts to happen in 2024 onwards. So at some point, the markets will have to think about the balance sheet effect of this tightening rather than just the flow.
But so when does this happen? And we know monetary policy, again, is a laggard. The markets seem to forget day in, day out of that. Is it towards the end of the year that we have the full force of the tightening, or could it come sooner?
So right now in the immediate future is that how does the Fed read the strength in the labor market data and, of course, with the some indicators of aggregate demand. We are thinking that they potentially add more hikes to the terminal rate. So you may go to 5.25 to 5.5% or even a bit higher. And then if you look at the refinancing flows, they kick in, for example, for the corporate sector, which has leveraged massively from 2024 onwards. So third quarter of this year is when we think there will be some more significant impact of this tightening, which started last year.
So what does it mean for your positioning in the markets right now? What are you buying? What are you selling?
So we have been on the cautious side, although we have been trying to navigate this cycle. We have been positive on EM, we have been positive on China, where we have a clear-cut trends of turnaround coming through. And we have been cautious on the developed markets because of this tightening. We are positive on bonds, but we have also now starting to be cautious in the short term, given that Fed becomes more hawkish. So right now, it's more about EM in China for us rather than developed markets.
And you believe actually that the China reopening is a global tailwind? Is that because it's inflationary or because it's still uncertain how it plays out?
So it creates positive domestic demand-driven factor for Europe. We've already seen some of those spillovers coming through, although the concern may come in if oil prices start to ramp up quite significantly, because that will change the narrative of headline inflation once again, and that's what we are watching very, very carefully. And another thing we are watching in China is the outlook for the property sector. How does that play out in the next few quarters?
And there were questions, right, about regulators or PBOC or just policymakers in general and how much support they would give that industry. Are you confident now that they are there ready to act and give more support?
I think the support is coming out as to put a floor on the dynamics. So we saw the numbers overnight, which is prices have flattened out month-on-month basis. So it's more to put a floor, and the question is, what is then the next driver of growth in China as the consumer starts to spend money? And infrastructure, for example, spending comes through, the race for renewables. So there are other sources of growth in China which may come through rather than property sector. But it remains to be seen that how big this structural role of property was in driving Chinese growth.
What's your take on emerging markets? And again, just to put everything into context, if the U.S. economy keeps on charging ahead, we could also potentially see a policy mistake from the Fed, and that would have huge implications on emerging markets.
So right now I agree with you, Francine, on that one. In fact, that may potentially become a problem in the next few months if the Fed continues to hike on the back of this data we are seeing. Right now, the emerging markets get a tailwind from valuations and the fact that inflation has been coming down rapidly. So there is this window of opportunity where you can generate those excess returns. But to your point, if the Fed becomes even more hawkish than it is right now, then we will have to think about those valuations once again. And
so in emerging markets, you're, for example, neutral credit, but overweight government bonds. In which regions?
So we are positive on the commodity-facing sectors because of the China reopening. We have also been positive on ASEAN, and for example, Thailand is another one which will be a beneficiary of these reopenings. So it's quite regional dynamics which are taking hold, where we can point out the trend and understand how it plays out, and it's not facing this tightening, if you will, which we are seeing in the U.S.
Is there something else that you're nervous about that the markets aren't quite seeing? I don't know if it's the energy complex, but on these days where we're seeing quite a good rally, what do you look at in terms of debt? The debt ceiling in the U.S., that's not priced in.
Precisely. So debt ceiling discussions we are concerned about, obviously, as winter comes to an end, what happens to Russia-Ukraine situation. Of course, this has been a stalemate, but we know things are moving in terms of army build-up. So that's something to keep an eye on, that if it doesn't spill over once again. And of course, the geopolitics between US and China on the back of course, the balloon saga. So that's something to keep an eye on.
Sam, we're just getting some breaking news, and actually you can probably help me put this into context. So China sanctions Lockheed Martin, Raytheon, and Taiwan on the Taiwan arms sale. And we're seeing quite a lot, of course, of, I guess, tensions between China and the U.S., also with, Taiwan semiconductors. What do you do with a headline like this? Does it, do you take less risk, or do you look through it?
So I think the critical question for us will be to think about that this is a structural decoupling, but it will ebb and flow. But we have to remember that China is very important for the global economy. It's very important for the global financial system, and we'll have to navigate this through. So we are focused on sectors which are a bit further away from this noise, if you will. So, for example, the consumers-driven sector. So that's how we would think about it from a medium-term perspective. But of course, this creates short-term nervousness for investors.
Yeah, but in general, markets have looked through a lot of the geopolitical aspects. If they don't impact a specific industry, how would you even play some of these larger tensions that are very difficult to quantify?
It's about, I think, and I think last year we had, at least for a short period of time, very intense pressure on some asset markets because of rising geopolitical tension. We saw the implications of war as well. I think it's about focusing on sectors, as I mentioned, on which are going to be a bit more immune. So in the U.S., for example, whether it's the non-interest rate sensitive sectors, for example, we have to focus on the small caps, which may benefit from this very strong labor market. So it's about searching for things which are a bit immune to these larger forces, but these forces are here to stay, and as you rightly pointed out, are very difficult to price in the short term.
Salmond, thank you so much for joining us. Salmond Ahmed there, a global head of macro and strategic asset allocation at Fidelity International. Now, coming up, Standard Chartered announces a $1 billion buyback, while Commerzbank lifts its full-year profit guidance. We'll look at those bank earnings in detail next, and this is Bloomberg.
What we've printed today is a 15% growth in our top line. That is the highest top line we have had since 2014. A 15% growth in our bottom line, again, the highest that we've had since 2014.
2022 was really a strong year. I mean, the last time that we have shown a similar net income result was in 2010. It is because of very strong revenues, clearly also driven by the net interest rate environment, but also because of a very disciplined cost management.
Well, those were the chief financial officers of Standard Chartered and Commerzbank speaking to us this morning on their earnings. Now, let's get more on bank earnings with Bloomberg's Tom Metcalf. Sometimes I call him the banking czar, sometimes I call him banking editor, but the point is he knows a lot about finance. Tom, if you start with Standard Chartered, so they missed estimates, and actually at the end of the day, the shares are up because they're giving back to shareholders because they don't want to be a takeover target.
Yeah, well, exactly. That's certainly one interpretation I've been hearing. But yeah, no, in terms of Standard Chartered, interesting set of results. They did miss those estimates, but that buyback seems to be being received very well. And they're also their guidance saying that 2023 is going to be strong, 2024. So they've raised their sort of return on tangible equity. So broadly, I think shares in London were up about 3% last time I checked. So yeah, you can take that as a pretty positive Q4 for them.
And Commerzbank, I mean, Commerzbank is like flying off the shelves in terms of share prices, gaining some 7% at the moment. And of course, this is, I mean, they've had 4 years of restructuring. So I don't know how much this is raising rates from the ECB and them just coming up with a good plan.
Yeah, I think the timing's been great for them. And we just heard from their CFO, right? And I think, you know, rare to hear such a positive German banker. So that was quite entertaining. But no, look, it's all about the interest rate story. And as you say, they've been going through this restructuring. And you know, happy days they got that kind of tailwind from this rising rate environment.
Now, Tom and I are also obsessed about Credit Suisse, and I have to say that it's never dull.
Always.
Credit Suisse. So we have 2 or 3 stories that we need to talk about today. First of all, what do we know about Credit Suisse First Boston?
Yeah, really interesting reporting from Gillian Tan in New York. Basically from inside the room, they had this big town hall, and you had Michael Klein go into these various Credit Suisse or CSV, FB employees saying, look, you're all going to have a stake in this business. You're all going to be shareholders. Bonuses are terrible, you know, 2022. I'm going to change that. We're going to be profitable straight from the first moment. And as a result, we expect bonuses to be better. So really making a big effort to try and improve kind of morale. Yeah. And, you know, he's positioning it as sort of a super boutique. So, you know, they're going to be kind of a big name in banking and kind of really just lean into that deal-making expertise that he's sort of hoping to build. Yeah,
and the idea, of course, that you reap rewards, so you eat what you kill.
Yeah, exactly.
It's very investment banker.
So I think it would be a very Wall Street unit and a very sort of, you know, focused and advisory-led, obviously, operation. And then,
Tom, the other question is like they're paying, you know, hundreds of millions.
Yeah, 210 million.
Because of a Georgian billionaire?
Yes, exactly. So this is a legal case where he's basically saying, you know, you kind of didn't sort of give your correct fiduciary duty to me as a sort of investing client. And anyway, so Credit Suisse came out with a legal filing today saying they have so far, over the course of this multi-year, you know, very sort of convoluted legal case, paid out about 210 million to him. So huge amounts, and just goes to show at the very high end of ultra-high net worth just how much money there is and how important these clients can be.
Tom, thank you so much. Tom Metcalf there, our finance editor. Now, coming up, but we'll have plenty more on the banks. We'll have plenty more on earnings. We also have a little bit of data in the U.S. And then, of course, it's Thursday. We have the U.K. show. We talk about Scotland. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Airbus shares have hit a 3-year high after the plane maker projected higher deliveries for this year. We'll also speak to the Chief Executive Officer, Guillaume Faury. That's at 10 a.m. UK time, so stay tuned for that. Now, staying with earnings, we have a number of chief executives coming on. We have Guillaume Faury of Airbus. We have Nestle Chief Executive. Now, they're forecasting that profitability will probably improve in 2023, and that's after some of the shipping costs eroded margins last year and higher raw materials. Now, this is the world's biggest food company. It reported the fastest sales growth in more than 2 decades, mainly driven by higher prices. Now, for more on all of this, we're joined by Bloomberg Intelligence's Duncan Fox. Duncan, thank you for joining us. I mean, we're going to talk drinks and we're going to talk ice cream with Nestle. This is a good Thursday.
2 key things
so far. I mean, why the surprises?
Well, pricing just needed to happen. I mean, we saw probably high 20% increases in raw material costs last year. You've got to pass that through. Part of that was La Nina and part of it was obviously the war in Ukraine. So, they've done 9%, give or take, for the year, which is very, very strong. But obviously volume did come off a little bit, as you said, for a few one-offs in Q4. But it's going to be a tough 2023, I think. Certainly the first half, anyway.
Duncan, what about Pernod Ricard? So we were having this off-air fight. This is like very UK versus continental about, the virtues of Ricard, which I like, you don't. But actually, people are just drinking everything.
It feels like we need something in our life that's pleasurable, given we've had lockdown for a couple of years, you haven't seen friends and family, and then you've got inflationary pressures coming on. So when you go out, and it's really the on-trade coming back into fore that's pushing these results, people are enjoying themselves and they're paying up for drinks. So Pernod have got their marketing absolutely spot on and giving us what we desire.
There you go. And also a bit of share buyback if you're a shareholder. What I don't really quite understand is that at some point, if you see interest rate hikes, then this will slow the economy. Is there anything out there in retail that you're seeing as saying, like, for the moment we're fine, for the moment the consumer's holding strong, but it could go through a downturn quite quickly? It's
at the moment, I think people want something that gives them some pleasure, and the affordable luxuries are things like drinks. So from Pernod's standpoint, they're going to do quite well, I think, from that. Travel retail is still something like 20% below where it was pre-COVID, and they're growing very quickly there. So that's going to open up, assuming people go on holidays, which, from what we've heard, that's one thing people will still spend on. And then you've got China reopening as well. From really didn't have a very good new year because of illness, but from February onwards, it sounds like people are going back out and doing what we did last year in terms of meeting friends and family again. So there's a few things there that should help them out in the second half. Pricing probably will still go up, but same, we are drinking less but better alcohol. Yeah. But
are we changing, actually? Are our tastes changing? And again, I mean, I Googled, we have a joke now with Duncan. He's definitely going to go home, at some point and try a Ricard, but, the Perroquet, so I think it's with grenadine. But actually, there's a lot more non-alcohol alcohols, right, that are doing a big push. Is that where it's turning? Like, if you look at all the distillers in the world, who's going to win in 4 years?
You need to have the right innovation. So you've got to have some zero or low alcohol alternatives, and all the spirits companies are doing a lot of work on that, and they've improved the tastes of those dramatically in the last 3 or 4 years. Same with beer as well. I mean, low alcohol beer when I was a student was utterly awful. Now it's not. So I think they've put a lot into innovation, which is allowing us to have zero alcohol product if we want it, but not water or juice. So.
All right. Brilliant analysis, of course. Duncan Fox will have to do a lot more research on some of these hub offerings. He's from Bloomberg Intelligence. Later this morning, we'll also be speaking to the Nestle Chief Executive Officer. He's Mark Schneider, on those results and much more. Don't miss that interview. It's at 10:30 a.m. London time. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Germany's airports will come to a near standstill on Friday, adding to a week of disruption for air travellers. A one-day walkout by the Labour union Verdi will hobble operations at 7 airports, including the country's largest in Frankfurt and Munich. Lufthansa flights saw widespread disruptions yesterday after workers accidentally drilled through 4 data cables, bringing down the carrier's IT systems. Now, US stock trades will soon be settled twice as quickly after the regulator said it would shorten the time needed to just 1 day. The move by the SEC aims to add structural issues exposed by the meme stock mania during the pandemic. SEC Chair Gary Gensler says the changes from May 2024 will make markets more resilient and also orderly. Fidelity Investments is looking to fill about 4,000 new roles by mid-year, even as rival asset managers do reduce headcount. The additional positions at the US company will focus on customer service and also technology, and follow a year of record hiring that took staff numbers to 68,000. Deutsche Bank is said to be cutting bonuses for staff who inappropriately used messaging services for business communications. Sources say the cuts affect pay still to be awarded for last year. Deutsche is among several banks fined over $2 billion by US regulators over the use of unauthorized communication channels. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thank you so much. We also need to talk about football, but that's maybe offline. This is a picture overall for some of these stocks. European stocks definitely on the rise. Traders embracing this risk-on mood. I'm looking at oil gaining on further signs of higher energy demand in China, the dollar falling against a lot of G10 currencies, yen strengthening. Coming up, we talk Scotland and the UK in our UK special. This is Bloomberg. Good morning, everyone, and welcome to Bloomberg UK, a new show with a special focus on the biggest challenges facing the British government, the economy, financial services and markets. I'm Francine Lacqua here in London. Now, on the show this week, Nicola Sturgeon's shock resignation as Scotland's First Minister has left the future of Scottish independence in doubt. We'll look at what's next for the movement. We'll be speaking with former First Scotland Minister Alex Salmond and Director of Chatham House, Bronwyn Maddox, about what Sturgeon's resignation means for the UK. Plus, British gas owner Centrica posts huge profits thanks to soaring energy prices. We'll be speaking with Dale Vince, founder of Ecotricity, a UK-based renewable electricity supplier, about the energy space. But we start with Nicola Sturgeon's shock resignation as First Minister and leader of the SNP, which has upended the quest for Scottish independence, with now the future of the movement itself in doubt. Well, Lizzie Burden explains.
I am announcing my intention to step down as First Minister and leader of my party.
If Nicola Sturgeon can't lead Scotland to independence, who can? As the nation's longest-serving and first female First Minister, she's been a force to be reckoned with. But then, in a complete surprise, she announced she's quitting. So what's next? Under her leadership, the Scottish National Party has dominated every election north of the border since the 2014 independence referendum, turbocharged by opposition to Brexit. But her repeated campaigns for a second independence vote have fallen flat. Now Sturgeon's party is deciding how next to pressure the UK to hold another vote. And with a recent YouGov poll showing that support for both the SNP and independence has waned, opinion is split. Some say a decision to use the next UK general election as a de facto vote on independence, as Nicola Sturgeon had planned, would be a mistake, because it wouldn't be recognised. Whatever direction the nationalist movement takes, Nicola Sturgeon won't be the driving force. She's handing over that hot potato to her successor, saying she won't stand in the way.
Lizzie Burden there on Nicola Sturgeon's legacy as Scotland's First Minister. Now, we're now joined by the former Scottish First Minister and SNP leader, Alex Salmond, who now leads the pro-independence Alba Party. Thank you for joining us, Mr. Salmond. Whatever your differences with Nicola Sturgeon, you have to acknowledge is that she was a very powerful voice, of course, in the independence movement. Does her departure damage the push for independence?
Well, obviously, it'll go through a new phase, but can I just remind you, when I resigned in 2014, I heard exactly the same voices saying independence was peaked. And what happened was a few months later, the unionist parties, Labour and Conservative, they lost all their seats in Scotland. So support for Scottish independence shifted in 2014 to almost half of the population, and basically it's remained there, up and down certainly, but it's remained there ever since. So the next leader who comes in to lead the SNP and become First Minister will inherit a position incomparably better than when I became the First Minister back in 2007.
But do you see a risk now that internal divisions, but also a lack of a strong, obvious successor to Nicola Sturgeon will lead to the resurgence of pro-union political politics and policies, including Labour?
Well, I mean, certainly it's the case that a difference between now and 2014 is that when I resigned, Nicola Sturgeon was a shoo-in to be my successor. This time round, there's maybe half a dozen people who would have a claim, some of the old guard, but some new faces, but they're talented people. And the next leader comes in, and it'll depend entirely on what that leader does. If that new First Minister reunites the independence movement, perhaps through an independence convention, brings in parties like Arafat and the Greens who believe in independence, cross-party groups, then the process might be a reinvigorating one. It will depend entirely what happens when the new leader comes in.
Right.
But, the Unionist Party thinking that, what happens to the SNP, any political party who believes that their success depends on what another party does is doomed for failure. That's what happens to political parties who don't have a clue how to do things for themselves.
Right, but as you've said, this relies solely on the new leader. Who do you think should lead this party? Who do you think has the best chance? So they have to be like Nicola Sturgeon.
Well, there's choices. I mean, they can go for the people who've been around for a while. There's sort of people like Angus Robertson, Humza Yousaf, Keith Brown, or they could go for the new guard of people coming through. There's people like Kate Forbes, Ash Denham. There's a variety of people in Westminster who are talented. Angus MacNeil, Joanna Cherry, who successfully defeated Boris Johnson in the English High Court on Brexit. So there's a range of talented people. Well, what's going to matter?
Who's your money on? If there's one person that you think...
No, I think it'll be one of the new guard. And what will happen is what will decide whether this is a reinvigoration of the national movement or a setback will be what that new leader does. But can I just repeat that, when I became leader of the SNP way back for the first time, the SNP were, independence was a pipe dream supported by a small number of people. The SNP were a fringe party. The SNP are now the dominant party in Scotland. The national movement is the most powerful force in Scotland. A reunited national movement will be unstoppable. And therefore, a lot's going to depend who is elected and, above all, the approach they take to bring the movement back together.
But what would you consider to be Sturgeon's greatest achievement during her time in office, given actually you're not really any closer to independence since 2014?
Well, her greatest achievement was as a communicator. I mean, Nicola is a first-class political communicator, as was shown during Brexit. I beg your pardon, as was shown during the pandemic, I would say, where the messaging from Edinburgh was much, much superior to the messaging from London. And she wins elections. But you're quite right. I mean, her failure has been she hasn't advanced the support for independence further forward than it was 8 years ago. But it was at a high level 8 years ago. So the SNP and the national movement and the next First Minister are looking for a strategy as well as looking for a new leader. But if that strategy is found, and if it's one of uniting the movement, then the process can be a reinvigorating one. As I say, political parties who think that they need the SNP failure or the SNP indecision as the route to success, any political party that wants to succeed has to do it on their own merits. That applies to the Unionist Party, applies to the party I lead, Arafat, it applies to every political party, and it applies to the SNP.
So what would you focus on at the moment? Is this actually a good opportunity to focus, all of the energy on independence, and is this a distraction instead of focusing on improving the quality of public services and the performance of the Scottish economy?
Well, I mean, the problems that the Scottish Government have encountered recently have been because they've shifted focus onto other issues apart from independence. And the next leader should settle these. I mean, there's problems in the health service and the education system. There's difficulties with some legislation coming, lack of enforcing a commitment, the gender recognition bill. The key to winning independence is to get the focus back onto, well, the biggest issue in Scotland. And you're about to talk about Centrica profits. We've got 1 million Scots in fuel poverty amid our land of energy plenty. We have a nation which is being denied the right of self-determination. That's the issue.
So focus less on independence and focus more on these issues. If you also look at the budget deficit in Scotland, it's much higher than the UK's overall. It's much higher than many EU countries and certainly than the EU's preferred level. What's the right way forward?
Well, the right way forward is to get the focus back on independence. I mean, this impression that the trouble with the SNP's encountered is because they focused on independence. The trouble the SNP's encountered is because they've been focusing on other issues which have split their party and their movement. Get the focus onto independence, onto the arguments for it. And incidentally, the idea that the most energy-rich country in Europe, which has massive supplies of clean, green, renewable, affordable power coming out of its ears, could produce 5 times as much electricity as it requires, will be in any economic difficulty with independence, is for the birds. Independence will be the key to unlock a prosperous future for Scotland.
What should the new SNP leader do with currency? So would an independent Scotland actually have a new currency and attempt to join the euro, or continue to use sterling and import some of the monetary policy from the rest of the UK?
Well, that's been one of the difficulties that the SNP have had deciding, and I would advise the new leader to opt for a new currency as quickly as possible. Of course, you'll always be able to use sterling, because sterling's an internationally tradable currency, but the most economically advantageous position would be to opt for a new currency as quick as possible. And as far as Europe's concerned, an ambition to rejoin the European Union over the medium term is fair enough. But the immediate priority is to get back into the single market. And the way to do that is through the European Free Trade Association, where the timescale for entry into that is a matter of months, not the years it takes you to get back into the European Union. So I certainly would advocate we should orientate the European policy towards rejoining the largest single market in the world through the European Free Trade Association.
But if you start talking about a new currency, does that not alienate voters that maybe then go to Labour?
Well, if you explain it properly and explain it in the sense that you can keep your assets in sterling if you so wish, so you keep your pension in sterling if you so wish, there's no difficulty with that. But the advantages of having a new currency in terms of economic flexibility are very, very strong. You've got to remember the UK is now a weak economy. It's a weak economy for 2 reasons. It has low productivity, and secondly, it's denied access to the biggest single market in the world on unfettered terms. The way to ensure success for the Scottish economy is to use our high productivity in key industries like energy and to get back into that 500 million single market. That should be the economic priority. It's worth looking, incidentally, that Northern Ireland, which traditionally, as you know, has been one of the most difficult areas for growth in the United Kingdom, because it stayed in the single market after the Brexit deal, has had the best relative economic statistics in history compared to the other nations of the UK. That should be a clue to what Scotland's economic priority should be, and that's rejoining the single market.
Yeah, I mean, there are a couple of numbers. We'll have to get you back on because there are numbers also that we're looking at that are independent, that have questionable statistics on education and the like.
Yes,
Albert Parker and former Scottish.
Interesting, because previously
we'll get you back on.
Northern Ireland's slow growth rate. The very fact that there's an argument now indicates the advantage of access to the single market.
We'll get you back on and we'll discuss this at length. The former Scottish First Minister Alex Salmond joining us this morning. Coming up, we continue the conversation, of course, on the impact of Nicola Sturgeon's shock resignation with Bronwyn Maddox, director of Chatham House. That's coming up next, and this is Bloomberg. Let's continue the conversation on the impact of the shock resignation of Nicola Sturgeon as First Minister. Now, my guest is director of London-based think tank, the Institute for Government. So we were talking, of course, about some of the pitfalls of what that means for independence. We also had a good conversation with Alex Salmond about everything that was coming up, including a possible referendum. Now, we're now joined by Bronwyn Maddox, director of Chatham House. Bronwyn, thank you so much for joining us. I mean, once and for all, do you consider the stepping down of Nicola Sturgeon a setback for Scotland? You're an independent think tank. Like, how should, the Prime Minister view this?
Oh, you've got lots of questions in there. Is it a setback for Scotland? No. Is it a setback for Scotland's independence? At the moment, yes, but that's a movement with an awful lot of momentum behind it, particularly among younger Scots. Is it a setback for Rishi Sunak? Absolutely not. Nor for Keir Starmer, who must be quite relieved this morning. I think that the champion of Scottish independence has stepped off the stage, and it is not quite clear yet who's going to follow her. Your interview with Alex Salmond broke off at a really interesting point, and you were just getting on to education and indeed health. And critics of Nicola Sturgeon and the SNP would say, look, they've been in control for a long time and standards of health and education have not thrived under them. And Scotland is really strained to try and pay for those things. And that's where the next focus of the next leader ought to be. And so that's why I gave you the answer I did at the beginning of, is it bad for Scotland? I think it is good for Scotland that the next leader is probably going to have to focus on those things.
But how does it affect overall the political landscape in Scotland? So many observers are now speculating that it plays in favour of the unionist parties, particularly Labour.
I think that's exactly right. At the moment, it is Labour's big chance after many years in the wilderness, if you like. They are the main unionist party capable of picking up votes, and they have, in the past, but not the distant past, the voice of Gordon Brown, former Labour leader, big advocate for the union, for Scotland being part of the United Kingdom. So they have a script, if you like. They have a resonance about it, and they have their arguments there. But the polls suggest that the voters that they're picking up are more the ones who are inclined to vote. They're not really making inroads into the independence vote. Yeah. They're picking up unionist voters, and they need to be able to make inroads into the actual SNP's independence vote. And lots of those are younger Scots, and that's really where the battle is at the moment.
Yeah. But why is there a lack of an obvious strong successor? Was this not planned out? And again, what does it mean for the focus? I mean, you have someone who will be relatively new, that actually people don't know that much, we think, and it'll be hard to prioritize.
Well, it will and it won't. I think it is the right time, even if possibly slightly late. The momentum had gone out of whatever Nicola Sturgeon was arguing. Her fine points were really over in the wake of Brexit, saying, look, many Scots really, really wanted to stay part of the European Union. And then, as Alex Salmond was saying, during the pandemic, where she was just more sure and definitely looked more disciplined than Boris Johnson and then the government in the UK, in Westminster, though actually it's very debatable about whether the results of her slightly different decisions on lockdown made very much difference at all. But she was a very good communicator about it. Yeah. But she'd stalled, and then she lost these two recent legal battles over the referendum and then over the gender recognition. Mm-hmm. And it's not clear where all this is going. So I think it was the right time.
All right, thank you so much for joining us. Bronwyn Maddox, their director of Chatham House, joining us. And apologies, I keep on losing my voice because there's just so much news out there. Be sure to subscribe also to Bloomberg's In the City podcasts on Apple Podcasts, Spotify, or wherever you get your podcasts. Today, we talk about Adani and the impact this has on the City of London. We also have a great, terrific story, actually, about the new city minister and what he's suggesting investors do if they want to sue the Bank of England. New episodes drop every Thursday, so the latest one is out today, and this is Bloomberg. Welcome back to Bloomberg UK. Now, British gas owner Centrica is boosting its share buyback program after reporting a record profit last year, joining Shell and BP reaping the rewards of soaring energy prices. Well, here to break down the results for us, Bloomberg's Rachel Morrison, who leads our team for power, gas and renewables in Europe. So, Rachel, thank you so much for coming on. I mean, it was an interesting set of results.
Yes, record profits for Centrica, and it comes at a really sensitive time, just 2 weeks after this prepayment meter scandal where they were accused of forcing vulnerable customers to take these prepayment meters. So there's already a windfall tax on companies like BP, Shell and Centrica in the UK, but these are extra profits, record profits, at a time when we expect customer bills to go up. So it's really difficult because the company were under pressure to turn around a really difficult time where they were, really not doing very well. But that turnaround has come at the same time as the cost of living crisis. And so it's difficult for them to position these results. And the CEO this morning has been saying, we feel for households who can't pay their bills, but also they have investors to answer to. And that's really what they're trying to do, to sort of give back to those investors that have stuck with them through the hard times. But politically, it does look difficult for them.
View has been that there will be a recession in the U.S. this year. It's clearly not going to start in the first quarter, based on all the evidence we've gathered so far.
What the equity market is worried about at this stage is recession, and that we're going to continue to see earnings downgrades on the back of weaker growth.
I think earnings growth at 3% for the next 12 months still looks quite optimistic. It's too early for us to expect equity markets to have begun a new leg.
This is Bloomberg Surveillance, early edition, with Anna Edwards and Matt Miller.
It's 10 a.m. in London, 5 a.m. in New York and 6 p.m. in Hong Kong. Our top stories today. Two European heavyweights, Nestle and Airbus, are out with earnings. We will talk with the CEOs of both companies. More changes at Credit Suisse. The Swiss bank cuts risk by getting out of distressed debt trading, while the spin-off of its investment banking tells employees they will all be shareholders of the venture. And a story of brotherhood and betrayal in the crypto industry. The founders of FTX offer dueling accounts of who's to blame for the company's collapse. Welcome to Bloomberg Surveillance, early edition. I'm Anna Edwards in London with Matt Miller in New York. And the thinking on Wall Street, Matt, kind of went like this yesterday. Good news is good news once again. And European equities not asking too many questions, because that's a change, and just happy to ride on that theme.
Yeah, I was going to say, in response to the sound you just heard from Freya Beamish, equity markets don't seem worried about anything. I mean, we haven't had here a significant drop in equities since last Thursday. So it's been a whole week, even in the face of, CPI that was stronger than expected, and Fed officials coming out and all saying kind of in unison, we're going to have to raise rates further and hold them higher for longer. But that doesn't seem to be freaking anybody out. Take a look at the trade this morning. You can see futures are off just 0.05%, and we closed higher yesterday. So at just shy of 4150 on the S&P 500, already above the year-end target that we have as an average of the strategists we surveyed. So, and remember, it's only the middle of February. The U.S. 10-year yield continues to come down. It did jump 6 basis points yesterday. It was up over 380. I think 382 was the high that we saw at the end of yesterday's close. Now we're at 378.19. So investors are buying some of that debt, but not really moving the needle a lot. The Bloomberg U.S. dollar index, which had been pretty strong, is coming down a little bit, but still holding at a relatively high level at 1240. That doesn't seem to be a real concern for equity investors. And then Bitcoin. What happened in Bitcoin? I mean, there are a lot of fundamentals that could move, technicals, I guess, in a sense, coins being burned, coins being lost, supply being shortened, and then a squeeze could drive prices up this high. But now we're just shy of $25,000 on Bitcoin, 24,659 in the face of a weaker dollar. In terms of what we saw in Asia, it was up for the most part. If you look at the GMM function on your Bloomberg terminal and put Asia in the drop box, you'll see all green for the equity indexes. For example, I added the Kospi here up 2%. The MSCI Asia Pacific, the broader index, up 0.8%. Sri Lanka was up 2.5%. The Hang Seng was a gainer, but I threw in the CSI 300 instead because it was one of the few outliers that was actually down in the Asia trade overnight. So the CSI 300 down 0.7%, kind of bucking that trend. The yen stronger against the dollar. Here you can see the U.S. dollar falling against the Japanese currency. It can now buy 133.8. So that's also still a relatively high level, but the movement, I think, is very interesting. What do you see, Anna, in Europe?
Yeah, well, dollar weakness through the Asia session and into the European session, possibly helping things along a little bit. That in keeping with the risk-on mood that we saw on Wall Street yesterday that we talked about, Matt, but also here in the European session this morning. So we're broadly stronger, not by much in London, but by much more than that over in France, up by just shy of 1% on the CAC 40. So strength almost across the board, almost all sectors in positive territory this morning. There are some macro themes to talk about. The euro in focus. We've just talked about the yen, Matt, and of course, dollar weakness is one of the stories today. A little bit of euro strength, not much, but 107 back over the 107 level. We've heard from the president of the ECB, Christine Lagarde. She's reaffirmed expectations around a 50 basis point hike in March. That's the latest thinking being re-established in the markets. This is the media sector here in Europe, and this is the best performing sector this morning, up 1.5%. Relex is the company that's at the heart of that. This is a data company and an events business. The latter of those, we're back in person at events, so that's doing pretty well. But it's also the outlook for the business that helped the stock go higher. And it's the outlook over at Commerzbank that also helps this German giant go higher. 7.7% higher, Matt, for the share price over at Commerzbank. We spoke to the CFO, Bettina Orlopp, a little bit earlier on in programming. She's positive about this year, positive about 2024. It seems the ECB raising rates and the German economy doing better than had been anticipated. And the Mittelstand finding its course better than had been anticipated. That mid-sized business community in Germany, those are drivers there. Nestle, though, down 1%. And this is a volume story. Concern about volume here at this business, Matt. We'll talk about this a little bit later on in the programme. We'll talk to the CEO. But 2 quarters of falling volumes as prices rise. What does that tell us about the ability of consumers to absorb those prices from here?
All right, we're going to keep an eye on those stocks and obviously talk to some of the CEOs of those companies as well. Let's get back, though, right now to the U.S. economic picture because retail sales in January jumped by the most in almost 2 years. And home builder sentiment rose in February, even in this higher rate environment. Jobless claims and PPI figures due later will provide the latest readings for Fed officials deciding on the path of rate hikes. I'm going to be paying very close attention to the producer price index. Bloomberg Markets reporter Valerie Teitel has more on what lies ahead amid this. Really, it's kind of a risk-on mood, even with the Fed saying, hey, rates are going to be higher for longer.
Now, with all these rate rises that the Fed did, they're not having any effect on the economy. Retail sales, what a print yesterday. We have seen some wild swings in the 2-year yield. I just want to recap this for you. Nearly a 25 basis point swing in the last 2 sessions, Matt. It's just been phenomenal. All around this data dependency that we're now hooked onto, every pressure on these data prints is now gigantic. It seems to be that there is a narrative that we're headed for no landing, or we might be just teetering on a cliff of the U.S. economy and the bottom is about to fall out. Either situation is uncomfortable. The 2-year yield has risen nearly 50 basis points since that hot payroll print just a few weeks ago, and we're now pricing in a Fed terminal rate closer to 5.25. But I want to talk about the other data we have out today. It's PPI day today. Will it confirm the big picture that we saw in the CPI? The fact that goods disinflation is slowing and services inflation is remaining sticky. All of this data comes at 8:30 New York time. We also get initial jobless claims, expecting a small tick up from last week's print. And then we also get housing starts. It seems to be that the weakness we saw in housing in December, in November, has started to stabilize. Will we get that hint today? All of this might be overshadowed. We do get the Hawks speaking today. We have Loretta Mester speaking first, and then Bullard later in the day. Will they reiterate that their dots are in the same spot, or have they moved their dots up? We know we get these new dot revisions in the Fed meeting on March 22nd. Will they say anything about their dots moving, or possibly the door being back open to 50 basis points?
Okay, and talking of the Fed, let's talk about staffing at the Fed then, Valerie. The Wall Street Journal says that the Chicago Fed president, Austin Goolsbee, is under consideration to fill the vacant role of Fed vice chair. What do we know about him?
He does lean slightly dovish, but the more interesting thing, I think, is that if his replacement isn't found at the Chicago Fed, Loretta Mester becomes a voter in the March meeting, and she is a hawk. So adding maybe another hawk into the mix of voters. We know that this announcement from Biden could come as soon as next week, but Brainerd is definitely leaving the Fed next week. That's what we know.
All right, Valerie, thanks very much. Bloomberg's Valerie Teitel there covering the economic moves and central bank reaction for us. Let's get back over to Europe now because bank earnings are in full swing there. And there's also some positive news for struggling Swiss lender Credit Suisse, or at least some of the bankers there. Bloomberg has gained an exclusive insight into plans for the lender's first Boston investment bank spinoff. Bloomberg finance editor Tom Metcalf joins us now. So, Tom, it appears that employees of the bank are going to own a piece of this super boutique.
Yeah, exactly. A really fascinating insight from kind of the inside the room for this town hall that they had yesterday. And yeah, we were reporting that Michael Klein basically told everyone in that room, you are going to have shares in this super boutique. And he was saying, look, we should be profitable really from day one. And as a result, we're expecting your bonuses to be pretty good. Obviously not this year, but maybe going forward. So really a big effort there from CSFB to sort of build morale, keep that talent, and hopefully make a success of itself.
OK, so that's the CSFB story. Other banking news then, Tom, good morning, includes, I've talked about Commerce Bank earlier, but Standard Chartered also. Standard Chartered missing estimates this morning, but increasing guidance, upping the guidance and announcing a bigger than expected buyback. The CFO, Andy Halford, spoke earlier to Bloomberg.
What we've printed today is a 15% growth in our top line. That is the highest top line we have had since 2014. A 15% growth in our bottom line, again, the highest that we've had since 2014.
The CFO of Standard Chartered there. So why are the shares doing so well then, given the miss? I mean, is it the buyback? Is it something they've said about M&A? What's the story, Tom?
Yeah, exactly. So they did miss, but yeah, the market seems to be responding a bit more to that buyback. So that's $1 billion, and I think analysts were kind of predicting 750 million. So nice uplift there for shareholders. And also the bank was coming out and saying, look, 2023 is looking pretty good for us. 2024 is looking pretty good for us. They raised their return on tangible equity sort of expectations. So I think, you know, focusing on the look forward. And as the CFO was just saying there, they're probably quite happy with the print over at Standard Chartered.
All right, Tom, thanks so much for joining us. Tom Metcalf there talking to us about what's going on in European banking. And by the way, in other finance news back here, Fidelity is bucking the firing trend with a hiring binge. The Boston-based firm wants to fill about 4,000 new jobs by mid-year. Fidelity said the new positions will focus on customer service and technology. Let's get to back to European business, though. Well, it's really a global business, isn't it? Airbus shares are climbing after the plane maker projected higher deliveries for this year. The company also announced it will accelerate output of its largest models as long-haul travel rebounds. Joining us now from Toulouse, France, the headquarters is the CEO, Guillaume Faury. Guillaume, thanks so much for coming on the program. Really looking forward to this. Talk to me first about the rebound that we've seen in travel, the rebound that we've seen in orders. This industry has been really leading the way in terms of the economic comeback post-COVID.
Indeed, we see a very strong demand for traffic of passengers around the world. There was a very strong demand for cargo during COVID. So the return to good times is indeed accelerating. We see now the opening of China contributing to the global recovery of the sector, and it's now a market where demand is actually stronger than supply.
So, you know, the supply chain issues have been frustrating, I know, across the industry, in the automotive industry as well, really everywhere. Tell me how that is getting back to normal. What do you expect in terms of the supply chain, especially as you see these increased orders? I'm sure you want to be able to build as many as you can to meet that demand.
Indeed, 2022 has been quite frustrating from that perspective. As I said earlier, we had a very strong demand for our products, and we've not been able to deliver at the rates we had anticipated. We have decided for 2023 to take into account, to face that reality of a very supply constrained environment, taking an objective to deliver in 2023 720 planes. But we see that for the outer years, the outlook is really good. We've decided to ramp up to rate 75 per month by 2026 on our single aisle family, the very successful A320 family. But we have also announced this morning that we are taking the rates up to rate 9 per month on the A350, which is close to what we had before COVID, where we were at rate 10. So actually, that's the whole industry, that is growing, that is accelerating, and we are limited by supply chain capabilities.
So increasing expectations, good morning to Guillaume, around the A350, but slightly reduced expectations now in the market around the A320, the narrow-body programme. Can you give us, is it possible to explain very succinctly who or what is to blame for the supply chain issues that continue to make it difficult for you to satisfy demand right now?
On the A320 family, on the single aisle, we have not changed the ultimate objective of reaching rate 75, but we have slightly postponed the date of reaching rate 75 to 2026. That's still a very steep ramp-up that is challenging for the supply chain given the current situation. What are the main problems in the supply chain? Well, it's a bit across the board, some systemic issues with the availability or the lack of availability of electronic components, chips, that is impacting a lot of suppliers. We've had the energy crisis situation impacting suppliers, a lot of difficulties to find skilled workforce around the world in the post-COVID environment. And the consequences of the Great Resignation 2021. The workforce in aviation is very skilled. It takes a lot of time to recruit, to train, and that's actually what we see happening today. But there are also other kind of problems linked to the logistical bottlenecks that we observed in 2022. It's easing now. So it's a bit of a lot of problems combining each other. That's what we faced in 2022, and we start from the assumption that's also what we will be facing in 2023.
Okay, so that's a list of some of the things that are frustrating the supply chain at the moment, Guillaume. Can I ask you about free cash flow? Some analysts responded a little coolly, a little negatively to your free cash flow forecast today, saying that, well, one analyst describing it as poor. How would you describe the free cash flow forecast? How would you respond?
Well, actually, we posted a very strong free cash flow in 2022, sort of 1.2 billion euros more than the guidance we had at the beginning of 2022 for 2022. So there's a lot of phasing on the free cash flow. More came in 2022. That was more front-loaded. But basically, we are not changing our 5 years guidance that we will be turning net result into cash. We call it cash conversion of 1 on the period. And therefore, it is less in 2023 than it has been in 2022. But over that period, this is designed to be a conversion of 1. So that's basically the effect of front-loaded non-recurring elements and working capital elements that were favorable in 2022 and that therefore will be missing in 2023.
You've had, on the operator side, Guillaume, the airlines have had a number of big news IT problems. Yesterday, Lufthansa was affected as Deutsche Telekom apparently just cut a cable. Southwest here in the U.S. has had real IT underinvestment, and that caused thousands of cancellations. I noticed that you're bidding for Atos' stake in Avidian, which is a cybersecurity business. What's the attraction there? How important is IT or preventing IT problems to a manufacturer like Airbus?
Well, thank you for making the point. Actually, we are moving from systems to data, to digital, to cyber, to a lot of high-power computing for simulating. So we are transforming Airbus at the moment. We have 2 main drivers, like many other companies. It's digitalization and decarbonization. And on top, we believe digitalization is an enabler of decarbonization. Atos is a historical partner of Airbus. We're working with them on many fronts. And as they are creating Avidian, that is a company that is focused on those technologies, we are very much looking forward to enlarging our partnership with them and potentially also taking an equity stake in the capital of Eviden. So we are working with them. It's the beginning of a process, but we think accelerating in digital, in data, in cyber is absolutely crucial for all businesses of Airbus, and we see this as an opportunity to accelerate in that direction if it makes sense from a financial standpoint.
And Guillaume, talking of processes, you've said that it will take time to cut supplies from Russia. Can you give us some more colour on how far through that process you are?
Well, actually, we've gone a long way forward. We are close to having completed what we want to achieve in no longer being depending on Russian titanium. That's something we expect to have completed by the end of this year, beginning of next year, to be completely and fully de-risked. So that's the roadmap we have already shared several times, and we stay on that roadmap.
Guillaume, thank you very much. Thanks for your time. The Airbus CEO Guillaume Faury joining us to talk about the numbers and look ahead to the year in aviation. Coming up on the programme, we'll stick with the earnings stories. We'll talk more corporate profits with the Nestle CEO Mark Schneider. Questions about volumes for this business as prices have been on the rise. What can consumers sustain? What can they put up with? Plus, Jane Foley joins us, Rabobank's head of FX strategy, to talk about the strong dollar, slightly weaker dollar, all that in the mix. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards out in London. Now, keeping you up to date with news from around the world, here's the first word. A warning from the Congressional Budget Office. It says the federal government would be at risk of a payment default as soon as July if Congress fails to raise the debt limit. House Republicans have threatened to hold off on lifting the debt ceiling until Democrats agree to cut future spending. A China-based former employee of semiconductor equipment maker ASML has stolen crucial data. The breach occurred in a repository that includes details of systems used in making some of the most advanced chips. The U.S. says it is deeply concerned with the breach. And according to several emails, former J.P. Morgan Chase executive Jess Staley, also formerly the CEO of Barclays, engaged in a discussion of Disney princesses with disgraced financier Jeffrey Epstein. According to a lawsuit by the U.S. Virgin Islands, the exchange was referring to young women and girls Epstein was procuring. The territory argues that J.P. Morgan is liable for facilitating the sexual abuse. The bank has said that the allegations are unsupported. Tesla has fired dozens of workers at its factory in Buffalo, New York, a day after employees there announced a union campaign. That's according to a complaint filed with the National Labor Relations Board. It accuses Tesla of retaliating for union activity. The electric car maker has not responded. Here in New York City, Mayor Eric Adams is reconsidering his requirement that city employees work in the office 5 days a week. The problem is that city jobs are going unfilled. The lure of other more flexible employers can be especially strong for city workers. And, you know, the mayor had pushed back against work from home for so long. But one of the problems was, you know, some people can work from home and other employees don't have the ability to. And he felt that that inequity was something that needed to be addressed by having everyone come in. However, it's very difficult to hire across the country these days if you don't allow employees that kind of flexibility. So it looks like he's having to go back on it.
Yeah, I can understand the equity arguments. I suppose the thing is, if you're operating in a tight labour market, as the US is, as the UK is, as many parts of the Western economy are, then the terms under which people want to be employed will kind of be increasingly set by labour, I suppose. And companies can have their views, or employers can have their views on what they want to see. But if the labour market is tight, then that's going to be the driver of things. This reminds me, this is a sort of post-pandemic phenomenon, isn't it, Matt? We'll talk about another post-pandemic phenomenon, which has been higher prices for things. We'll talk about that, price inflation and volumes as a result, with Nestle, the CEO, coming up shortly.
Yeah, no, I'm very much looking forward to that. interview, one of two marquee interviews, dare I say, that we have in this program this morning. Nestle CEO Mark Schneider is coming up. That's an interview you don't want to miss, especially in this environment of food price inflation. This company says it's going to avoid raising costs and grow margins. We'll bring you more. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Two European heavyweights, Nestle and Airbus, are out with earnings this morning. We heard from the Airbus CEO earlier this hour. Up next, we hear from the CEO of Nestle. More changes at Credit Suisse. The Swiss bank cuts risk by getting out of distressed debt trading, while the spin-off of its investment banking tells employees they will all be shareholders of the venture. And a story of brotherhood and betrayal in the crypto industry. The founders of FTX offer dueling accounts of who's to blame for the company's collapse. I'm Anna Edwards in London with Matt Miller in New York. More on crypto a little bit later in the programme, Matt. But for now, we're at an interesting point in the market thinking, I suppose. Yesterday was an interesting day. Good news became good news once again. Stocks went higher on good news about retailers' ability to consume. Today, though, futures are fairly flat to negative.
Yeah, absolutely. Well, you know, flat is better than down, right? And we closed yesterday up at 4,100, I think 4,147. So a relatively high level on the S&P, considering strategists feel like we're going to end the year at 4,100. It's interesting to me that we're not going any further down today. If you look at S&P futures right now, they're off just 1/100th of 1%. Investors are buying bonds. That pushes the yield down a little bit, but we closed at a pretty high level in the bond trade yesterday at, I think, 382. So now we're at 378 even on the 10-year yield. There are some great stories on the terminal, by the way, about how yields are really threatening stocks. For example, in 6-month T-bills, you can get like 4.7%, and S&P earnings are yielding just 5%. So it's great competition there. The Bloomberg U.S. Dollar Index coming off just a bit at 1240, also holding at a relatively high level. And though I know we're saving the crypto discussion for later, I'm very much looking forward to the big take story, which is today about SBF's close friendship with Gary Wang, that the latter is now turning state's evidence against the former. But Bitcoin just shot up overnight, $24,641. Maybe it's a short squeeze. Nonetheless, this price is well above what it was before the collapse of FTX and Genesis, so it doesn't look like any of that has deterred investors too much at all. A ton of great news on the earnings front is pushing up individual stocks in today's pre-market. Cisco, for example, a $200 billion internet giant, jumping after an upbeat forecast showed that demand for tech infrastructure is holding up better than expected. And speaking of the internet, Twilio shares surged, set for their biggest gain in 3 months after a forecast-beating profit outlook prompted analysts to raise price targets on what is an internet infrastructure software maker. If you hadn't heard about it, don't worry, neither had I, but it's a $12 billion company. Zillow shares are up after that company reported quarterly revenue that beat estimates as well, helped by a better than expected period for its core advertising business. And then Roku shares are rising as well after the streaming video platform reported fourth quarter results that beat expectations and gave a revenue forecast that was ahead of consensus. So earnings stories, the micro could boost the market today, even as the macro has reigned supreme for well over a year now, Anna.
Yeah, and we're still dealing with both of those themes here in Europe then, Matt. The European equity market up by 0.7% this morning. Just a couple of weeks ago, we were talking about a record close on the FTSE. The FTSE has oil and gas companies to partly thank for that. The CAC 40 has a lot of exposure to China and luxury goods companies. And so we see the CAC 40 up by 1.2% today. Looks as if that market is heading for a record close. So that's the red headline across the Bloomberg in the last few minutes or so. Commerzbank up by just over 8%, increasingly gaining this morning. The outlook for the business sounding very strong from from the CFO we spoke to earlier on, Bettina Orlopp. She was talking about 23 and also 24 looking positive for the business as the ECB hikes rates and the German economy looks more resilient than expected. And here's Nestle. The share price of Nestle down by just shy of 0.9%. This business, though, dealing with a difficult pricing environment, putting up its prices in the last quarter and facing 2 quarters back-to-back of falling volumes. For more on those Nestle results, let's talk now to the CEO of the business, Mark Schneider, who joins us from the company's headquarters in Switzerland. Mark, very nice to have you with us. Thanks so much for coming to join us. So 2 quarters of back-to-back volume declines, that's not something that happens at Nestle very often. You've been putting up prices as many in the sector have been doing. Does that tell us that consumer goods or your business has reached the edge of its pricing power? Is that what that combination of higher prices and lower volumes tells us?
Well, good morning, and thanks for having me. And obviously, we're watching volume development very closely, but we're somewhat less concerned about that second half of the year 2022. There were some lapping issues and also some deliberate choices that we have taken, for example, reducing the number of SKUs that acted as a drag on our volume development. But those position the company for a more successful 23 and beyond, and so they were good choices. We've also seen some normalization in the out-of-home part of our business, where clearly there have been tremendous growth in the first half. And in the second half, we've seen now some normalization here with levels now in the out-of-home business not seen since the year 2019. So overall, that somewhat mitigated volume slowdown here is not something that we have much of a concern over. As we look now at the year 2023, we're guiding a solid 6 to 8% organic growth, and also a margin development in the range of 17 to 17.5%. So very dependable, steady growth and improvement over time in profitability, just as we were saying towards 2025.
Mark, you mentioned their out-of-home demand. I noticed that restaurant demand in North America, that's where you saw volumes coming under pressure. You say you're not too concerned about those volume trends we've seen. Does that mean that we should expect something different from that restaurant demand in North America story in 2023?
Look, this is a pretty volatile time with several trends happening at the same time. So one is that clearly, as a concern over inflation, there may have been somewhat less out-of-home consumption. But the other was that we were also starting to lap now quarters that had already improved at the tail end of 2021. And hence, the whole thing added up to something that was more pronounced. But overall, again, given that 90% of our business is in-home and retail, I think we're well positioned for continued good growth in 2023.
What are you doing, Mark, to cut down on costs and mitigate inflation to consumers? There are smaller companies like Kraft Heinz out yesterday said they don't plan on any more price increases in most areas. And obviously, you have to compete with those brands, or consumers will step down if they feel the pinch.
Yeah. Look, that's a valid question. And obviously, we've been working really, really hard all throughout the year to shield consumers from the impact of inflation. We've been hit by inflation, just like everyone else around the world. And we've been working hard in our operations to reduce cost, reduce complexity, and also, of course, use our purchasing power to reduce the impact here of inflation. I think we've been successful at this, and the numbers bear it out. Our gross margin decline for the year had been 260 basis points. The underlying trading operating profit margin decline is only 30 basis points. So it shows you that we worked very, very hard inside the company to reduce the impact of inflation on our earnings this year.
Mark, did I hear reported correctly that you're still selling frozen treats in Russia, that you're still selling ice cream to Russians? Because the idea, I think, with the global sanctions crackdown is that if you make it harder for the Russians and they put more pressure on their leader not to do things like invade sovereign countries. So why doesn't Nestle pull out of that country completely?
We have acted completely in line with the announcements that we made last March. And that is to pare down significantly our food and beverage offering on very basic and essential items. So we cut about 2/3 of the SKUs in this country. But as a food manufacturer, we also feel deep commitments to the geography that we are serving. That is something we've proven time and time again in other situations. And there's a reason that medical products and food are exempt from sanctions, and we want to be sure that we're staying close to the Russian consumer.
But ice cream?
Ice cream is part of a joint venture company that is not under our control.
And can I ask what's happened to the facilities that you operate there, Mark? Because some others in this particular space, consumer-facing businesses, have been concerned that as they pull back from Russia, that they risk their assets being seized or in some way being transferred to Russian owners. Is that something that you're feeling the pressure of?
Look, I feel there's been lots of peers pointing out that this is not a time when there is easy choices. Again, even just pulling back to these basic and necessary food and beverage items has not been easy to pull off. And so again, between staying true and serving the consumer that relies on food and beverage products, the regulatory environment in Russia, and then some of the constraints, this has not been an easy path. No easy choices, I'm sure. Can I ask about M&A, about deals that you might do? Mark, you talked about the organic growth opportunities, but are you under pressure to spend some of the money that you have on doing deals? Are shareholders telling you they want you to do that? And if so, what size of deals might you be looking at? Look, I don't see an immediate pressure here to do deals. And frankly, even if there was, we don't do deals for deal's sake. I think it's important that there's good strategic fit, that there's good cultural fit, and that also the financials, of course, make sense. We've repeatedly pointed out that over the years, we acted in a disciplined manner when it came to M&A. We took the liberty of walking away from deals when things didn't make sense price-wise or when we had concerns over the cultural fit, and that stance will not change. In fact, one of the announcements that we were making today is that we see continued good benefit on the other end, and that is focusing our company further, be that at the SKU level or brand level. And so buying and selling to optimize our portfolio, that has always been a hallmark of Nestle, and we'll continue to engage in that.
Mark, your foods are obviously a vital part of life for mankind. We need to eat to survive. The supplements business has the potential to really improve the quality of life for people around the world. What's the state of that business right now, and what's your outlook?
Yeah, so we've been assembling some leading global brands in the supplements business. We believe in the power of supplementation to optimize people's nutrition. We have seen tremendous surges in demand during COVID. So 2020 and 2021 were blockbuster years for supplements. Now in 2022, growth was somewhat more moderated because you had some lapping effects. But going forward now, and for the post-COVID world, I think we're seeing continued good benefit and organic growth rates in the mid-single-digit rate.
Mark, thank you so much. Thanks for giving us your time this morning. The Nestle CEO, Mark Schneider, joining us here to talk about the numbers and the outlook for the year ahead. Coming up, Jane Faury joins us, Rabobank Head of FX Strategy. What's her outlook for the dollar? Where does she see the euro by the end of the year? Lots to discuss with Jane. The BOJ, obviously a key focus for 2023, with change at the top. This is Bloomberg. This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, an exclusive interview with the General Motors Chair and CEO, Mary Barra. That's at 3:30 p.m. in New York. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Now, we've talked a lot about earnings this morning. Let's go back to the macro themes. We're seeing the dollar a little weaker today amid a risk-on mood in markets. Joining us to discuss, Jane Faury, Rabobank Head of FX Strategy. Jane, nice to see you here in studio in London. So risk-on today, at least in the European session, US futures not sure yet, but risk-on in Europe, the dollar a little weaker, but stepping back. Obviously, last year, really strong dollar, that was the theme. We've questioned that in 2023, haven't we? Where are you now in terms of that dollar strength?
Well, the questioning has brought a change in positioning. So whereas last year, maybe up until October, November, the market was very long dollars, began to pair those back, carried on pairing those back into January. And the opposite really true for the euros as people bought into that euro recovery theme. We're now at a position where people are looking at the economic data, the macro events, through a lens of being pretty long euros and not so long dollars. And of course, that changes the tone. So we're seeing a few battles here. I think the clear one is with respect to the Fed. Is the Fed going to be higher for longer? The market's begun to come round to that. In January, clearly, the market didn't believe that at all. And that's been a dollar positive thing. But at the same time, I think there is the risk of, recession is possible for Germany this year. And that perhaps means that people are questioning the length or their long euro positions too.
But that's interesting then. On euro dollar, where do we get to there? Because we're at 107. We went up to sort of 110 or so and have come back down as we've seen people go back into the dollar a little bit. So that's more maybe the Fed conversation, whereas the ECB's been maybe a little more consistent there. So where do we head on euro dollar? Do you think there's much more upside, Jane?
I think there could be some downside, actually. I think the dollar could come back. And this depends on, obviously, the strength of US data. I think we saw a sea change, really, with that payrolls for January. The retail sales, the CPI have all suggested that actually maybe the Fed guidance is correct. Maybe the Fed will be higher for longer. Maybe the market has had to adjust towards that Fed view, and I think that could be ongoing. But clearly it's going to be data dependent. But it's our view that Fed rates will be higher, and as the market comes around to that, then it could give the dollar some support.
I'm interested, Jane, first of all, good morning. Thank you for coming in. I'm interested, Jane, in the yen and forecasts from Mr. Yen himself that we could strengthen to 120. Right now, we're hovering around 134, even with Ueda coming into office. What do you expect him to bring to the Bank of Japan, and what kind of reaction will traders have in dollar yen?
Well, I think the market's been learning a lot about the Bank of Japan over the last, 4, 5, 6 months. I think, some months ago they thought, yield curve control will be abandoned in the same way that the Australians abandoned it. Not so. And I think the market's coming round to that, understanding that this is a much slower story, a very different story in Japan, where they're nurturing inflation. And I don't think there's going to be an awful lot of rapid change in the Bank of Japan. And I don't think any new leader would have brought around rapid change, because they've made policy mistakes before. They remember, 20 years ago when they hiked interest rates too early and then they had to cut them again. And they do not want to do that again. Japan has fought years, decades of disinflation, deflation, and it now sees perhaps a once-in-a-lifetime opportunity to break that cycle, and it doesn't want to get it wrong. Now, that doesn't mean to say there won't be the opportunity to change yield curve control, maybe even a small interest rate hike, perhaps later in the year. But I think that's about as much as we can possibly expect. The market's beginning to accept that. Perhaps we can see a little bit of yen strength into the spring, into the summer, if that seems likely, that scenario. But we've got to view this through what's happening to the dollar at that period of time.
How much of an issue is the infamous yen carry trade that, masters of the universe use to fund their purchases? Is it still the biggest one on, and is it all dollar yen, or do they sell the yen against other currencies?
Well, yeah, you would sell the yen against other currencies if you anticipated, that your yield would be higher. But things have changed. I mean, it used to be back in the day, the yen-Aussie trade, that was a very popular trade. That is no longer such an issue. There is no longer a current account deficit. For instance, in Australia, their yields are no longer so different to those of the US. So things do change, but certainly the yen remains a funding currency.
Jane, thank you very much. Thanks for joining us. Jane Faury of Rabobank, ending that conversation on the BOJ. Lots more to watch as we see the process underway to appoint a new governor at the BOJ. Coming up, we'll talk crypto, a tale of brotherhood and betrayal. The two FTX founders are offering dueling accounts of the FTX fiasco and of who's ultimately to blame. More from our big take story next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards in London. FTX co-founders Sam Bankman-Fried and Gary Wang are offering dueling accounts of the crypto exchange's downfall and, of course, pointing fingers at others when it comes to who's ultimately to blame. Today's Big Take gives a closer look at this friendship, I guess former friendship, which has turned now to betrayal. Ava Benny Morrison, Bloomberg legal reporter who co-wrote this story, joins us now. And Ava, it's just an incredible story. I read it start to finish and was left even wanting more. So tell us about the reporting, first of all. You actually went to Palo Alto and visited Sam Bankman-Fried at his home.
That's right. So we spent a few weeks digging into this subject and trying to get more of an insight into the friendship between Sam and Gary. I went to California and I sat down with Sam inside his parents' house. He's living there at the moment under house arrest after being granted bail and putting up a $250 million bond. So I spent a couple of hours with him and spoke about his friendship with Gary Wang. Those two started FTX together. They met in math camp. That friendship blossomed through the university studies, and then they ended up becoming these crypto billionaires. So we spoke to Sam, obviously, and then people who went to school with Gary and Sam, went to university with them, and then former FTX colleagues as well.
So, I mean, it's so fascinating that these two incredibly intelligent people were so vastly different, right? I mean, Sam Bankman-Fried is tweeting out every part of his life all the time, or certainly was until very recently. And Gary Wang, I guess, is not a very prevalent person on social media, right? You got access to SBF. I'm assuming Gary Wang didn't want to answer the phone and talk to you. So it's interesting to me when I come down to the line about no one's sure who's controlling who. Is there a possibility that Wang was controlling SBF, or was it definitely Sam like pulling the strings on Gary Wang?
That's an interesting question. I think people inside FTX who worked very closely with them have spoken to sort of the strength and their unusual bond. I think because they had that history together, and you're right, they were like chalk and cheese. Sam had this very large public profile, this big persona, and Gary Wang sort of operated in the shadows. There are barely any photographs of him online. He has very little social media presence as well. But they did work in partnership for a lot of the time in building Alameda Research and FTX as well. So I guess we'll see at trial who will make those arguments about who was following orders from who. We've got a picture of a partnership and a friendship, but Gary has suggested in his evidence to prosecutors already that he was directed to do certain things, so he was following orders.
All right, Ava, thanks very much. Unfortunately, that's all we have time for, but I encourage our viewers and listeners to definitely go online, Bloomberg.com/bigtake, to read this story, or if you have a terminal in front of you, you can just type NI Big Take. Tune in as well to Bloomberg Crypto. That's our program that focuses on the industry every Tuesday at 1 p.m. New York time, 6 p.m. in London. That's it for Surveillance Early Edition. Surveillance, the OG, is up next with Tom, John, and Lisa. This is Bloomberg.